Good afternoon. George Cavaligos for HFT bonds. Day before unemployment. Not usually a great trading day. Today was okay. Market was straight up all night last night, and it looked like people were front running the the month end, day before unemployment short covering. The month-end indexers typically do some buying on the last day of the month. The index extensions this month were very small, almost non-existent. So we saw a little bit of buying overnight. It was basically straight up short covering whenever you see that kind of a trade, I'd say. Got in here this morning, and everybody I read on Twitter, that a lot of people I actually respect were either already long the market or wanted to buy a dip. Why? I still think we're in a bear move here. We may be getting towards the end, but do you want to be the guy that catches the falling knife? If we're going to get a rally, the market will tell us. And there's some vague signs, early vague signs of a turning point. Yesterday we had the kind of minor reversal day. That trade was satisfied overnight with the higher high. We didn't break any resistance levels, and then we immediately come in and the market's for sale, and we took advantage of that and put on a small short. Covered most of it too early, but that's all right. Day before unemployment, I thought we'd see a very narrow range. We did see a pretty narrow range. We did get the one extension lower, and I covered the rest of the short there and called it a day at that point. Like I said, there are a couple minor things. We're going to talk about some of these minor evidences that we're seeing in the market that may be pointing to the market getting a little bit overdone at this point. Time for a correction at some point. There's a lot of things pointing in that direction, but the market hasn't responded yet. You have to wait for the market to respond before you become the guy that catches the falling knife. We don't have to be the first person to get long the market. You just want to be the first person to make money getting long the market. So that's our plan. Tomorrow's unemployment. A lot of times you'll see important turning points in the market on unemployment. It happens quite often. Tomorrow's number could be a pretty strong number. Based on the jobless claims data that we saw from the survey week, I think we could see a pretty strong number, the kind of thing that might punch the market lower and maybe spike it lower into an important level. I still keep focusing on the 130.18 and 130.22 area on the 10-year. Bonds have already met those similar levels. There are some significant support levels below the bonds at 145.02 to 03 level. I think I'd like to see a test of that level and then a rebound and a nice positive close kind of thing before I try to jump in on some kind of a bull trade here. I think short term you want to be looking lower, but at the same time you don't want to be pressing your risk here. The market's come off quite a bit. We are, like I said, the bonds have already met some important targets. The 10-year hasn't. I just think you take advantage of the short-term trades on the short side until they don't work. So that's the bottom line. Come and join us in the webinar. We're starting in about 35 minutes, 40 minutes. It's free. I hope you guys, every month, the day before non-farm, the Thursday before non-farm, we have a great webinar. Ashraf Laidi comes in and does a nice analysis on the currencies and on some of the precious metals and crude, some other things. Obviously I do the bonds, and then Farid does a very comprehensive analysis of equities and specific equities too, the indices and the specific stocks. So come and join us. We'll see you there.